Calls for crypto regulation continue after the collapse of FTX. Joining us now is Sheila Bair, former chair of the FDIC. She's also an external director of Paxos, a blockchain technology company. It's good to see you, Sheila. It's been a while.
Yeah, thanks for having me. Nice to see you.
Thanksgiving, happy holidays. We're hearing that everybody's in their corners, as you can imagine, depending on whether you have a skin in the game on what all of this means. People are trying to say, well, there's crypto, and it's the same as the internet back in the late 90s. There was pets.com and there was Amazon, and they're a far cry from each other, and the underlying asset itself still has value. But then, or some of them may have value. But then you have, this was written today, Wall Street Journal, the eventual price of crypto's final price could be zero. Senator Warren, I think, thinks that much greater government oversight is necessary. But if we had done that to the internet back then, there were calls for that when that collapsed in '99. That wouldn't have been the right move back then either. Where are you on this?
So I do think, and Senator Warren has acknowledged that there may be potential good uses of the technology. I've always differentiated the asset from the technology that underpins the asset. And I do think the technology holds a lot of promise for socially beneficial uses, payments and settlement, clearing, tracking supply chains. There are a lot of interesting use cases that can and should be developed. The problem is most of this industry has just gone into speculative assets, and that works until it doesn't. A lot of it was driven by very low interest rates, cheap to borrow and take a flyer on crypto. So we're seeing that house of cards starting to collapse now. And, overall, I think those that don't have value, the market is punishing. And those that do have value, hopefully, will be able to operate in a clear regulatory environment to help, nurture the technology where it's socially beneficial and have regulations shut it down where it's not.
Right. There's a lot of blame to go around. But one,
yes, there is.
One that does appeal to me a little is that regulators in this country have been so slow and I don't know, cautious that it drove this exchange to the Bahamas, where you're just you're asking for it when there's no rules down there. And I understand scammers are going to scam, and you can't. No one's to blame except Bankman-Fried maybe himself. But where were we? Why can't the SEC get it together on regulating the exchanges so that we could bring it here?
Yeah, well, there is a disappointing lack of agility in our regulatory system. We saw that during the great financial crisis, too, where the regulators were very slow to respond with mortgage lending standards as this, the subprime crisis was spinning out of control. I think part of it has to do with our balkanized regulatory structure. We're unique in the world on this. We've got one for securities, one for commodities, a bunch for banks. And turf event inevitably gets into the policy discussions when it shouldn't. Frankly, Congress is part of the problem, too, political pressure. You saw what kinds of bills were starting to move ahead in Congress that are being heavily influenced by industry. But the political pressure, especially if you're the SEC and CFTC and you're funded through the congressional appropriations process, that makes you a bit timid. So there are a lot of things that need to be fixed. More consolidation among regulators and Congress exercising greater restraint when the lobbies come knocking on their door to put pressure on regulators to stand back and let the regulators do it.
Well, you can, we don't know how often the CFTC chair met with Bankman-Fried. We had they haven't released the calendar yet. We don't know. We do know it was a bipartisan greasing of palms across the board. Maybe more. One side may have benefited a little more, but there was huge amounts. There were a lot of money changing hands with Bankman-Fried, and these are the people making the laws for the regulation. That's something we could probably clean that up if we could. So I probably never will, but
it's true. No, it's a part of our political process that members of Congress are heavily reliant on contributions to run their campaigns. So that's a whole. We can spend a lot of time on that too. I think public awareness, the media exposing it, that helps put counter pressure on it. And in this case, you're right, it was bipartisan. I will say, just because regulator meets with someone, we don't know the facts there. But when I was chair of the FDIC, I had an open door policy. I tried to accommodate all meeting requests because I didn't want people to say they had a special end for me. So, I met with people that I will certainly did not endorse. So, always with my general counsel. So I just wouldn't say that, just meeting with somebody means that there's some special relationship there. The meeting in itself doesn't mean anything.